I'm honored to have our next guest up here. We have with us today Ofer Vicus, CEO of Aduro Clean Technologies. Aduro is headquartered in London, Canada. It's actually where my wife went to college. Develops water-based chemical recycling technologies. The company's platform converts end-of-life plastics and tire rubbers to specialty chemicals and fuels, upgrades heavy crude oils, and transforms oils into renewable fuels and specialty chemicals. The company has 30 million shares. The stock trades around $14 for a 420 million market cap and 7 million of net cash. Welcome, Ofer, and we'll have a presentation. We'll sit down and do some Q&A.
Thank you very much for having me. As said, my name is Ofer. I'm the co-founder and the CEO of Aduro Clean Technologies. I'm here to a little bit talk about plastic recycling. I feel it's a little bit outlier to the stuff that you've been hearing today. I hope you won't get bored and it will be as exciting for you as it's exciting for me. I'm always happy to present the company to anyone who's willing to listen to me, apart from my wife, I'll say. So what's Aduro? Aduro, right now, we conceived, I think, in 2011. We become public first time in April 2021. We have uplisted the NASDAQ last year in November 7. It's a wonderful journey ever since. There's a lot of excitement around the company. We've been, before April 2021, there was no reason for any one of you to even know that we exist. We've done our research basically in the shadows. We didn't have a lot of money, but there's no social footprint to the company. There was no tweeters. There was nothing that disclosed what we've been doing, and I explained a little bit why is that. So coming, of course, being public company, we have the forward-looking statement. And what we detect basically at that early stage is a phenomenon that was maybe slipping beneath other technologies for many, many years. Just to give you some perspective, the first, I guess, approach or technology that in our sector is probably about 75 years old. And the phenomenon that we detect was that under certain conditions with water, heavy oil basically is breaking down. We break carbon-carbon bonds. And with the help of the metals that act as a catalyst in the heavy oil. So that was a big secret because until that time, most of the organization were trying to get rid of the metals out of the heavy oil. That's our genesis. And then we understood based on that if we add something like glycerol or ethanol or methanol, really cheap material that is abundant, that is available for us, we also do something which we call in situ hydrogen. So when you're thinking about it, now you have a system that is very independent because some of the accessories that you need are available right there. The catalyst is available in the crude. We just have to increase it for crude application. And some glycerol adds up and you now don't need to do any hydrogenation. In our space, it's a big thing because most of the organizations that in our space require massive amount of capital, just investment, just in production of hydrogen. And everything around it is quite capital intense. So here we are. A few years after we developed this platform technology that has different aspects. Each one of them is very, very unique. And it's really with very large addressable market. We started with the heavy oil upgrading. Soon enough, somewhere in 2021, the plastic upscaling came in immediately there and becomes very, very aggressive. So we turn and shift our resources and start developing that technology. And we have other applications that we're not touching. So our main goal right now is just do the chemical recycling. Immediately after, move on and do a little bit of heavy oil upgrading, and then we'll take it from there. But there is a huge addressable market around it. I'll speak a little bit about plastic recycling, chemical recycling in particular. So that approach that I mentioned that exists for many, many years, called pyrolysis, basically heat motivated to anyone that doesn't want to stay on the higher level. A heat-motivated approach where you break those long, heavy molecules. The idea is to try and take those molecules and turn them into something a little bit smaller, but not small enough to create gases. So you're kind of running around this area where you take solid, like waste plastic, turn it into some oil, but try to do the minimum there and not run it into some issues that are happening. And so that heat-motivated approach is basically the dominant approach. Companies that are around this approach, Plastic Energy, used to be associated a lot with SABIC. Honeywell is doing something like that. Quantifuel used to be represented by BASF. Very large organization that are doing it. And within time, we developed what we call the chemolysis. And that approach is basically a little bit chemically limited. And because it's chemically limited, it's also end up to be economically limited. And what do I mean is, you know, for this approach to exist, they're taking a lot of different weights plastic. And when you hit it into the same condition, those are really different chemicals inside. They react differently. And so not just that you have to take the best of that material, otherwise you run into issues. Later you have to hydrogenate it. And so the technology that we have developed to the waste plastic basically operates in a low temperature area. We are having this ability to tolerate a little bit more contamination in our feedstock. That's a big thing for us because contamination move a little bit of contamination. Let's say if we're talking on regular mechanical or chemical recycling, they would need something like 90% polyolefin and 10% contamination. We're actually able to move this bar to 85%, 80%, and we're sometimes investigating 75%, which in return reduce the waste plastic cost, the feedstock, really down to the bottom. Normally they're fighting for $600-700 a ton, where we can push that to almost the zero sometimes on one hand. On the other hand, these guys are using a lot of hydrogen, capital of intense approach, and also a little bit environmentally problematic. The fact that we're using material just to create some chemistry inside really cancel that need. And so we have this leeway to take a little bit more material that is a lower value and treat it to a higher level without the need of hydrogen, so we have a little bit more space there and margin to play with. And so this technology basically is operating in a lower energy mode. It's really easily to scale up. So most of the organization that we're talking about are doing something centralized, hundreds of millions of dollars. Just to give you a space, you know, an idea in terms of size, normal operation would be around 100,000 tons a year. We see applications at 25,000 tons a year. And so for them, it's a pilot. For us, it's a commercial unit, which effectively you can turn it into different business model because of that. And the scale up is pretty easier. It's much cheaper because it doesn't require all those nuances that I mentioned. So in return, the technology produces basically a higher yield of material that is a higher value at a lower cost. And that is significant in our space. And so now you can imagine why we can, rather than commit ourselves to hundreds of millions of dollars of a site, we can basically be active out there and set and install lower cost site out there. And that gives us a lot of room to imagine where we are. And all the organizations that I mentioned right now in terms of size, just to give you an idea, basically are holding on to 1% of the chemical recycling market. Mechanical recycling is doing about 9%, and our share market is basically, we see our opportunity from this 49% that otherwise goes to the landfill. So many of the organizations that I mentioned reject a lot of material. It's actually material that we can fight for and work with it and do something good with it. And the size of the market is quite large. There are about 400 million tons of that already every year that society is producing. And there is a lot out there in the landfills, and it's coming everywhere and anywhere all around us. Basically, this is a slide that I want to share with you, how we see basically the value chain and where we are in this value chain. Most of the organizations that we are talking that in my space basically work in one sector. So, you know, from chemical manufacturing to designers to retail to consumers. Normally, you would see organizations that are working in one segment, building some kind of a device, trying to give solution. Aduro, because of our ability to scale up and because of our functionality to configure different solutions, we're able to work across the value chain, which in return gives us a lot of data. We see things coming at us far more, I think, faster than anyone else. And we don't have to compete with the peers that are working there. We just go somewhere else, identifying different type of feedstock and moving them and addressing them. And so in our business model, we dictate at a very early stage that we will do two things. The first one, we will work on a licensing-based model. And the second one, that we will do some build-on-operate, smaller scale operation. And the reason being was that the build-on-operate, we see that as in our control, something that we can generate revenue quite quickly. We can secure the future of the company. And the build-on-operate will be with a larger organization that are interested in the licensing, sorry, not the build-on, their licensing model. Over the years, we have developed our go-to-market approach, and this is just an example of this slide that I want to share with you. The top bar where you see post-consumer plastic, this is basically those licensing models that I'm talking about. We're now engaged with several Fortune 500 companies that are looking for solution for the waste, and basically looking for, it's the most complex material. So they're looking for lower value feedstock with the highest technology capabilities. We're definitely a contender there out there to show what we call a next generation to the current approaches. Then in the middle, you have something that is maybe a little bit more domestic. Industrial waste, it's maybe a cleaner but maybe harder material. Food packaging could be an example. We've seen companies that are sending out 50, 60, 40 tons of cutting waste every month out there that we think we can take care. So imagine this thing will never see the landfill. It will, if we will be able to approach it. And beneath that is what we think there are immediate application that is in our hand, and we identify several of them that we want to investigate. And in fact, in our press release, you'll see some of those investigations. Agricultural waste is something that is very interesting for us. Just to give you an idea, in terms of the particularity of the waste plastic, so most of the organization working on polyethylene, polypropylene, polystyrene, give and take. Those are the numbers. Those are by far the most hardest material to basically recycle. And so if it comes with post-consumer plastic, it basically comes as a mix. But if you touch agricultural waste, it will be 95% polyethylene. And so if you find a solution on a smaller scale, you have immediate revenue to a golden material, and you can configure a solution to do that. And that's what we're trying to do day in and day out. We see other applications such as the synthetic turf waste. And every time we identify application that we strongly believe in, we publish it. You can look at our press release and you can follow up the story. Over the years, and because this is really a petrochemical process that requires a lot of time for organization to understand, and we caught basically the industry by surprise, we built this customer engagement approach where we felt, and this was something that we've done as an early stage before we had, little vials actually, where we contact large organization and we show them what is it we've been doing. And so the first program, the first approach is just prove me what you're doing. Show me that, above the 100 and 200 companies that I was looking for, you're the guy that has the magic wand. And so basically we build this program where we're doing some sampling work. It's normally something that we generate revenue out because we're trying to separate the boys from the men, basically, by charging the organization that are working with us. That's as the first, just as a concept. And for the investors, it is an important message that there are interest in what we do. And then we try to turn some of those guys into collaborative approach. And that is basically we're taking the organization off the bench. It's now investing resources, working with us on customization. And you as an investors knows that if we have a few of those technology evaluation and lesser, some of those that are doing collaboration, we have much better chances to do commercialization. And so this is just a great example of what we've been doing right now. The company is also under a Shell Game Changer program where for the last 2 years, Shell is asking a lot of questions. I cannot answer publicly about how they ask it. We learn a lot of this from this relationship because it's basically we are under NDA and we have to respect that NDA, sometimes to the frustration of the investors. There's just 2-3 more slides that I'd like to show you how we're approaching the market. Every year, we're basically setting up some goals. This is a long-term journey, of course, and so you have to try and minimize the time that you're working with. And so we started for 2025, we said we're going to commercialize our pilot unit. This is about 10 kilos an hour. And as we want to do it between September and October. And as we speak, actually, those machines are starting to come into our plant, and we are now assembling them. But we also said that we're going to finish the design for the semi-commercial unit right there in December. And that's what we're doing right now. The design will be finished, and we're aiming to build that semi-commercial unit by the end of 2026. So very, very aggressive timeline in a place that takes years of research and validation. And so in order to do things like that, basically we're buying things sometimes a year and a half before we have the design. And that's what happened with the current machine, and now it's been commissioned, and that's what will happen with the future machine. And at that point of time, we basically can take that machine and reconfigure it towards some commercial application, and this is where the fun start, I guess. This is another slide that I want to share with you just a little bit. Sometimes I get comments about, you're silent about what is it you're doing internally, and I thought this is a good slide just to generate, every project that we have, like building the pilot, constitute 5, 6 independent projects, lots of money, lots of time. There's basically a madhouse around the company. And this is some of the activities that we're going to do this year. And if we will not meet those, I will have to come here, after 4 months and explain what happens in that end. And so for this year, we're going to finish the pilot. We're going to start finishing the design for the semi-commercial unit. We're going to make some decisions about where we're going to put our demo plant, and we're going to engage an engineering company that we are expecting to build it up. So you see as an investors that there is some energy where we keep on moving, pushing the envelope towards commercialization. It was a big day for us, just ringing the bells. But beyond that, it's a fairly strict and simple chart of the company. There's no debt. There's no any financial overheads around the company. What you see is what you get, basically. We are very careful with the way we are raising our money. We're very careful with the way we treat our investors. We had numerous times where we've been offered, if we needed at 70 cents or we needed $2 million, we've been offered several times, maybe take $6 million for 69 cents. And we know the impact. And so we listen very carefully to how our investor thinks of us. And so in return, that now you can see how this is actually, trade-off. On one hand, we're trying to execute and we say exactly what we're trying to do. On the other hand, we build this loyalty from investors, and 35% of them are coming since we've been 15 cents actually and building up. And so when we are raising money, it's for effect, and many of them are coming in and participating in those rounds. I mean, if you have any questions, thank you very much for having me. I mean, that's the end of my presentation, unless there's a, go ahead.
Maybe we could sit down and have a little discussion.
Yeah.
Thank you, and please feel free to sit. Thank you for the overview, Ofer. Maybe you could go through. You sort of talked about the HCT technology. What percentage do you think? And I assume using this technology, you talked about that 75%. I guess obviously the holy grail is to get down to almost full. You could get almost any plastic that gets inputted in.
I'll explain. Yep.
Yes, but maybe you could talk about what is the how far could it go? How much contamination could you get?
So the market normally works on 90 and 10% rule. So chemical recycling, it's a complex activity, and when you do 90%, you basically ends up paying for the best of the best material. Just imagine there's a pile and people, machines are picking up the best of the best. The rest is rejected. We're talking about 30 to 50% polyolefin that are just, end up in the. So if you on a smaller scale, can build machines that, and a little bit, depending on what you do, and, increase that ratio to 85%. And we see that there's not a lot of work needs to be done to make that happen. We're basically taking material that is worth almost nothing, and we turn it into something that has, so our price, generally speaking, range between $1,200-$1,500 a ton to $2,000 a ton. And so if you're working on material that's worth $600-$700 a ton, it's one thing. If you're working on material that's worth less, and then you don't need to expand and invest in hydrogen, that gives you a lot of leeway to do all kind of things and invest in that. This is, where the philosophy is coming in.
And back to hydrogen, you talked about how almost the rest of the market is using that, how they're gonna go to market. What, maybe you could give us a little more background on why, where it came about for your technology, and the not to need the use of hydrogen, high cost hydrogen.
Yeah. So first, I haven't covered the environmental impact of those things. So not using hydrogen or not consuming hydrogen is a big thing, first and foremost. What we saw in 2011 is that we're breaking the chains, and we're breaking the molecules to a certain extent. And then, it becomes, it was polymerized. The material becomes like hockey puck. And then through the journey and the discussion that we had with other applications, such as renewable fuel, we realized that somehow we're consuming the glycerol using the same thing, the same approach, and the material is stable. So we start doing trade-off. And now you can see why other organizations probably missed that turn, because if you're a heavy oil producer, it's unlikely for you to do any research in renewable. And if you're in renewable, it's unlikely for you to do anything in heavy oil. And so we kept that information secretly for 10 years. And we developed significant amount of patents through that years. We feel quite comfortable where we are from IP perspective. But that it is lessons learned from one to the other have brought us where we are today.
And this technology, I assume, is implicit. We didn't really talk a lot about PFAS specifically, but obviously being able to recycle or reuse these plastics, you're assuming a large part of that is plastics that end up in a landfill and emit PFAS into the landfill. So is that sort of the concept of where you're going?
Yet to be seen on that end. So it's a little bit new to me. If you're looking at that specific area, I just have to go back and see what we can or cannot do. Generally speaking, you're talking about anything that either is buried. We don't want to touch with things that nobody wants to touch, things that are buried, but okay, there is a possibility there. But more importantly, we want to achieve or get access to feedstock before it will end up to the landfill. That will be the concept. So at the end of the day, you're talking about a pile. There's a central location. Everyone takes from that pile. And now, some organization takes the best of the best. The rest is left. And regulation really, really coming down hard on this. So it's becoming a reality for everyone. And so you have to invest a lot of resources. If we can, us coming up and taking that material before is really significant. And us, doing, let's say, the same as everyone else, but more efficient, higher yield. We're talking about 80 to 95% sometimes of liquid yield, which we call fungible material, so material that has value. So let alone this, in terms of the environmental, CO2 emission, everything else, it's just very different numbers. But specifically to that subject, I'll have to check out.
Yeah, no, sure. I'm sure that's probably the case if you can avoid it in the first place, going into landfills or getting into the environment. And then you talked about a licensing model. Maybe you could talk a little bit more about that and why you're going to market that way. So you're saying you would essentially license this technology out, yes. And then maybe you could talk a little bit more about that.
So we build in our space. I've seen over the last 20 years companies that just build a pilot and invite people to. Many of you heard of this. Invite people to kind of see it, and then they left on with the bills. And a lot of it happens also in the heavy oil. And it strikes me a little bit scared because I noticed that you get to stay with the bill. And so on one hand, the licensing model requires some responsibility and performance guarantee and all things attached. And it felt like it is the right time and for the right organization. So the organization that has access to the feedstock, organization that has endless amount of money, they don't care. They just need the best technology around it. And so in 2025, regulations start coming down, and those organizations has to start thinking about which technology they're going to approach. So again, we are in the right time, in the right place to do that. But we have developed this independent approach that we will also do some build on operate, because we do not know, and we can't speak to when exactly Total or Shell or anyone else will finish their, that some of those organizations can take 2 years, some of those organizations will take a year and a half, I don't know. So we wanted to make sure that we generate revenue enough for us to keep on moving, and when the guys will come, that will be great. And that created this reality where we actually had resources to develop independently, so we were never rely on any organization to do our development. Actually, when that organization is ready and finished to do its due diligence, now we open the kimono and we show them what we have. But that was the call, and I think so far the journey is fantastic.
And you talked about partners like Total. Maybe you could talk about the pipeline, the backlog, maybe not in specifics, but just sort of how it's looking, the growth there.
Yeah, so there's a lot of eyeballs looking at our technology right now. Us coming with a pilot is significant for us, significant year for us, because we feel this is the pilot will be built and is being built and designed with industrial components, 100%. So no research, no lab stuff, nothing inside. And so you can, in concept, just inflate it. When organizations are coming in and maybe looking at it, it's we have to give them the time to adjust. They have to understand how to configure it, how to build something of their own. It takes a little bit of time to do so. On the other hand, it's we can see an interest of organization, to test it, and we're working day and night to bring those into the market, basically.
Maybe I'll open up for the audience. Got a couple back in the back.
Thank you. This is really exciting, and Maryland, speaking for my state, is deeply interested in circular economy concepts and projects. We have so our Department of the Environment recently had a permit in front of us from another large chemical company that's doing research in exactly this area. I think it's pyrolysis, not chemolysis. That is out. None of this is proprietary, confidential information. That was applying for a permit just for a research air permit at its research facility. And this is sort of at the intersection of this issue and PFAS. The community just blew up around concern around air emissions from PFAS from the research project, given the inability to know exactly what's in the feedstock to the process. And so wondering if your company has grappled with questions around what's in our feedstock, if we're recycling, if we're... So curious about your process to understand, and we had to go through this process as a permitting authority to figure out what are the appropriate methods and monitoring protocols to determine what's in that feedstock.
Yeah, it's a great question. My first answer is that there's no free lunch. You're dealing with garbage, and so if you have garbage, you garbage in, you garbage out, and you have to invest resources to clean that garbage. And so you can't just first ignore the tuna fish and the dogs and the chickens and everything else, and then hope that gold will come out of it. It's not going to happen ever, and we better understand that. There's a question there, how much you're willing to kind of put out there in order to try and clean it up, and that comes from different components. One of them is the regulation. Whatever is available already today, it's a big issue, and you probably need to invest first in some kind of a sorting and cleaning material. So there's no way really a way around it. And so what you're looking at basically that is a golden opportunity for a company like us. And I'll give you just right there the ratio. If we are thinking that we are, whatever we're bringing into this machine, and whatever we bring into this machine it's already somewhat sorted. It's not really but if we're bringing something already into this machine, then we assume about 85 to 95% of that material to take part of the chemistry. That means you leave 5% of whatever it is out there that will do. So effectively a lower number, much lower number than whatever you should expect in general, but no free lunch there. You'll have to, we'll have to invest in sorting to clean existing material. And if we'll conduct ourselves and be able to reach out to material that will never, reach out before, then that's one bonus. And another element is, of course, talking about the future. Endless amount of companies are actually redesigning back plastic product, right? Like we can't really do without plastic. I think everyone agree on that. And so there's a few on this, checklist that you have to go through, but not particular one. Silver bullet will say, yeah, I'll just take, 50% garbage and I'll create gold out of it.
Yeah, well, that's a good point, Ofer. There's no free lunch, but hopefully we get technologies like yours up and running here very, very shortly. And thank you for being here today. Thanks again for your support.
Thank you for having me.
Yep, and we'll hope to get you back next year. Thank you.
Oh, I'll be proud every time. Just tell me and I'll come.
Tony Bancroft and Timothy Winter, CFA, are portfolio managers. Wayne Pinsent, CFA, is Director of Research and Research Analyst, and Rosemary Morbelli, CFA, and Dr. Rebecca Stern, PhD, are Research Analysts at Gabelli Funds. The above webcast is a recording from the 3rd Annual PFAS Symposium, which occurred on September 17, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of June 30, 2025, affiliates of GAMCO Investors Incorporated beneficially owned 1.1% of Minerals Technologies and less than 1% of all other companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800 Gabelli 800 422 3554914 921 5100 fax 914 921 5118 info@gabelli.com.